Morning Discord, morning YouTube. Let's get into it. Okay, so today's the Fed meeting, so let's trade light until closer to that time when the market's going to start to move. We might have one or two good movements in the morning, so let's see. I'm going to let these early candles play out. I'm definitely going to trade light today. All right, Discord. Is the stream working, Discord? Okay, cool. All right. All right, so we have the 5 MA at 659.27. Let's see if we grab some liquidity off that at some point today. Powell's going to be speaking later. So we're above the water, starting a bull cycle. Let's see how much we get out of this one. So we want to look to see if we grab liquidity off the 5. If we grab liquidity off the 5 and bounce, or if we break, retest, and reject underneath the 5. So if the 5 is here, we want to look for something like that. So I left some algos from yesterday. So what we see on here right now, the image on the screen now, give me 1 second. Yeah, full port. The image on the screen now that you're seeing with this orange and with this purple, I translated from the 30-minute, right? So this purple down here is this purple right here. So I try to translate it in the from the 30-minute over to the 1 minute, so we could visualize a little bit better. All right, so you see the orange here is the orange here. All right, here we go. All right, so we have our liquidity range in here. Okay, we see our liquidity boxes. So let's see if we go and test this level up here. So you see there's a secondary liquidity down here, which is, yeah, there's secondary liquidity down here. Let's be patient today. I mean, not every day is a trading day, and a lot of traders on the trading floor, not market makers, but, you know, institutional traders, they might not even trade on FOMC day. Let's put a target. I'm gonna target a nice round number. 6100, or excuse me, 661. So this the pink is 6650 key level. 61 is obviously the next key level, obviously. 61 because it's a round number. The market likes round numbers. I'm gonna give it a moment before I start generating algos. I'm gonna give it a second because I don't want to give myself a bias this early. Sometimes I zoom out like this just to get a bigger picture, right? Because when I'm zoomed in all the way like this, it's I lose sight. I lose the plot. Because we might see a movement like this and think something, but on the grand scheme, you're like, oh wait, nothing's really happened. All right, yeah, we want to see if we're gonna test the 5 to grab liquidity off the 5. Excuse me. If you take any trades this morning, you got to get in and get out. You got to get your money and get out. I'm definitely weary of this range between pink and this white key level because this was from yesterday. This pink was from yesterday. And this orange also from yesterday, and I told you we're most likely going to use it today. So normally on the break of this orange, we would expect maybe an upward motion, like right here, right? The break of this orange. Yesterday it was if the price breaks orange and we're above pink to take this trade here, you would have had to get in and out really quick. Yeah, you'd have to get in and out really quick here. So I don't know if anyone took that from yesterday, but this is what I was saying yesterday. I'll get back to the action. Give me a moment. It's going to be applicable today to wait for the break and retest or the break and retest. Yeah, see in this tight range here, we got to be careful. Oh man, I didn't even check the contract prices yet. Okay, here we go. Oh yeah, they're a little bit elevated today, huh? So contract prices are elevated today. That usually has it just means volatility. Usually it just means volatility in the market. We should probably check the VIX and see if there's any volatility spikes in the VIX. So Ron, just to address expectations of trades, and what I was trying to explain to you yesterday, we can only go level by level. And what I mean by that is, for example, let's say opening bell, right? We get the first candle. We can only get, our expectation is only to the next key level of liquidity, which was the pink, right? And we knew the pink from yesterday. However we decided that the liquidity was here, this is why we put pink, right? So our expectation from wherever we are can only be to the next liquidity level is pink, right? So then above pink, your next expectation is here, is 61. And that's all we can do. We can't, expect, because every single what you got to understand, and understanding how long to hold your trades for, especially you, Ron, because you can hold, you have the ability to hold for a lot longer than most. Wait for a little bit more movement. Zoom out a little bit. You got to zoom out just a little bit before you start taking trades. And you go to the next level, right? Level by level. So once we get to this level, then we go to the next level. That's all you can expect to get from these trades, right? So if you're in this trade, you know, don't expect anything past 59.63. Now let's say we get underneath 59.63. Then the risk to reward from this point here, if you want to buy puts, your risk to reward is going to be to the 5, because you know that this 5 MA is the next level of liquidity. And you have to measure your risk to reward between here, if you want to take the risk of chop in here, or if you want to take the risk of it just touching and bouncing. But this is what you need to understand. It could easily touch right here, grab liquidity, and bounce. That's why your stop needs to be, or your take profit needs to be closer to this level, because you got to watch out for this. But you also got to give it a little bit of room to dance at the 5 to push down. So it can be very tricky in that regard. This is where you have to look at the candles and the price action to decide where, hey, look, this move just started. The MACD is, you know, the legs are spreading open. I can hold this trade. So at that time, once you start getting up to your next key level, then you look at your other indications, your other indicators, and your price action to determine what's most likely to happen next, right? So let's say we did break the 5, and then we just started a bear cycle. Yeah, it's probably safe to hold on to, you know, let's say we did a break, retest, reject of the 5, and we just started, let's say we just started this bear cycle. Yeah, then maybe hold a little bit longer, right? Even if it gets uncomfortable, the candles get uncomfortable. If it's just starting and you see the legs spreading apart, then even if you get one green candle, because you have to understand, that's why I was trying to tell you guys yesterday, look to see what happens at certain points in time. Look to see what happens if you just hold on a little longer and wait for this MACD and this signal line to close. You'll see you can get a lot better results instead of immediately closing your trade out because you think it's going against you. So the reason why I'm telling you all this is just so you can understand of your expectations, right? We go level by level. That's all we can expect, because every single level is a point for a flexion to grab liquidity from to go the other direction. That's why we need microstructure to tell us what direction is most likely to happen. But to sum it up, it's level by level. We take out liquidity by liquidity, and we know we try to assess the direction based on the microstructure. All right, let's generate some algos now. I've been doing a lot of talking. Today's going to be an interesting day. Fed meetings move the market, right? So today's going to be one of those days where, or it could be, it's very common to have one of those days where, hold on, let me focus really quick. Today's going to be one of those days where you can take a trade, get in on a trade. Let's say you buy a put because it breaks a certain key level and you buy a put. Today can be so violent that within the same candle, price action can stop you out. So that's why today is not for, I mean, you got nothing to prove to anyone. So if you want to take today, paper trade and figure out how the market works, things like that, not a bad idea. Not a bad idea. What is going on in this chat? What are you guys talking about? All right, let's see what happens at this key level. So yesterday I had it marked out and I had it highlighted, so probably a reason for that. I'll give it a second, see what happens. If we bounce here, if we break straight through. And remember this range we're in, right? Pink to you see this down here? This is the range down here. So even if we do get underneath the 5, your next level of liquidity is going to be right here. This is why I pointed out this other liquidity, right? Earlier. So if we do get under the 5, sure, there's a lot of liquidity right here, but all we know is that if we do get under here, we just have enough strength to get to this next key level. That's all we know. That's the only maybe expectation we should have. All right, now look, see, this is the this is the purple algo from the 30-minute, from the bottom of this 30-minute. So on our 30-minute chart, we want to see if we get underneath, break, retest, reject, which should line up with our 5. Right? It should line up with our 5 if we break, retest, reject underneath this purple. I try to translate it from the 30-minute so we can see a little bit better, and we can see how large the movement actually is. Right? You see how big the purple actually is, because on our 30-minute it looks like one solid thin line, but look at our 1 minute, you can see it's actually a bit thicker. So you see the movement here, how wide it actually is, but on the 30-minute it's one thin line. So that's why I wanted to show that. And Ron, this is what I'm talking about. See, look, we don't know what's gonna happen. Look at where they grab liquidity from. Exactly on the next level. We knew we're in a range here, right? We knew that from yesterday. This is all from yesterday. Remember, I told you we're gonna use this orange today. So this is all from yesterday. I went and reconstructed some of it, but I left most of it, or I left the important part. This is what I'm saying. If you're gonna start if you immediately buy a call, you can only target next level of liquidity. This level of liquidity can only get you to this next level of liquidity. That's why I'm telling you we're in a range here. Once you're in the range, you have to wait until you break, retest, and reject. Now, I think a lot of the problems that we have as traders is we don't know if a break and retest consists of, let's say pink is our point of interest. We don't know if the break and retest is a 1 candle break, right? And then it comes back to retest the next candle, and then it shoots up like this. We don't know if it's gonna do this, or if it's gonna have, if it's gonna take a movement, right? A movement meaning it's gonna do this, break, retest, and then reject. We don't know if this is gonna happen, right? So this is the hardest part about doing the break, retest, and reject, because is this the break and retest that's gonna happen, or is the bigger one? I understand it, I get it. That's the hard part about doing this stuff. That's why I'm trying to zoom out to show you that the movement is not just a thin line. On the 30-minute, we see a thin line, right? But the actual movement is thicker. So that's what I'm trying to show you, where your stops, your stops, you need to give a little more space for your movement to happen, right? Because the purple is a movement. This purple in the range is a movement. That's what I'm talking about. So you need to give yourself the range of the movement for your stops and your maybe take profits if you have take profits. I don't like to put take profit because why limit yourself? I much rather a stop loss, because I can just, I don't know, especially you, Ron, I don't know how your stuff works. Look at the microstructure that, hold on, look at the microstructure that might be forming, right? Is it going to be this? You see the microstructure there? Or is it going to be this. See the microstructure in there? And now you can only, your trade should only be from the break of this blue to pink. Now, if you didn't get in, when I'm saying the break of blue and I calculate like, oh shit, look how much money we're winning, or you know, whatever it is that the nonsense that I say. Whenever I say that stuff, I am only calculating if you as a trader or as a perfect person were able to somehow set a limit order for this, or if you were able to get in exactly at whenever this price breaks this level right here. When it breaks this level, you know, at least if you can get some type of profit off of it, then I'll say, okay, that's a decent trade. You could have made something in a reasonable amount of time. If it breaks and goes right back against you, I usually don't count it. I usually count that as a stop hunt. But something like this, I'll count this as a win, right? Because that's a decent little scalp from 559.96 back up to key level. That's a nice little starter position. And if you, let's say you went in heavy because you understand these fundamentals, then you can make a quick living just from here to here. Once you understand these basic fundamentals, right? So Ron, we were having this talk yesterday. This is the risk management you need to have in place in your mind. Therefore, even in slow moving days, you still have a basic understanding of the market to make money, to make this thing sustainable, right? So if you already knew your target is here and your target is here, you scale based on that. This is your highest level of probability of success, right? Now, if you want to go in on puts, your highest level of success on puts is right here to right here. If you want to go in on calls, your best option is to wait for the break and retest. You see why? Because you know you're in this range. This is how you manage your risk. Now, is the candle gonna break one candle and then come back and retest it and then shoot out? I don't know. That I don't know. But how we do get some confirmation is when we see a break, a retest, and a reject. How pretty it is, I don't know. That's why I'm saying it's okay. Here, I'm gonna give you. I know I'm taking a lot out of the session today to teach, but I want to get through this because it's important so we understand our expectations and how to manage the risk in order to come out on top. Okay, so this is what I've come up with when I first started, before I could hold a little longer, when it, you know, because sometimes it gets uncomfortable to hold, right? Before I was able to do that, the strategy that I employed was, once it broke, I took the trade, right? And I put my stop right there. Zero stop. If anything, zero stop, right? And then, because I was hoping for the breakout that it just keeps going up, right? So what I do is I put my stop there. If it goes against me, I don't lose anything. And if I win big. Or at least I can get something, because I can, you know, slide my stop to the next, you know, whatever the profit is. So, and you know what, with that strategy, sure, it stopped me out a lot for no reason. However, my win rate was really high because or, you know, I would say at a win rate, even though the trade didn't necessarily make money, I consider not losing a lot of money a win, right? I didn't lose a lot, or I didn't lose anything. So what I'm trying to say is this, is what I did. I'm not telling you to do this. You need to come up with your own strategy. But if you want to take a trade but you're afraid of it, make your stop tight. If it goes against you, then you don't lose anything. If you win big. And you can always get back in. And look, Ron, what did I say? If you buy a put here, I get it. It makes sense, right? But if you're engaged in this strategy, you got to be quick on it, right? As soon as it happens, you got to be quick to move your stop. We just went over this, right? If you want to buy puts here, I get it. It makes sense. But your safety calls are going to be above here, right? It has to do this because you know the liquidity is literally right here. We're in it. And you know this little tiny couple cents is not going to tell you much because if you zoom out, it looks like a thin line. But if you zoom in, it's a thicker area. So we got to give ourselves a little more room with our stop losses and our take profits and things like that. A little more room because it's actually a lot wider of a range that you're actually in. Okay, I'm done. Let me get off the soapbox now. Now I'm done off the soapbox. If anyone's any clarification on that, just send me a DM or put it in the message. Look, we literally just talked about it. If you wanted to buy a put here, I get it. This is a reasonable expectation. It's reasonable to expect a put here. The reason why is because we never broke above and made this support. So because that never happened, there's no reason to not expect a rejection at the key level. Now, if we got above here and started making this support, then I'm looking for calls, right? But it never happened. Look, we just went over this. So I should count this for the wins because I literally just said, if you buy a put here, okay. I get it. This is how you make money in the market. Understanding just the basic rules. So on days like today, the basic rules don't apply. The basic rules don't apply days like today. That's why I told you trade light. Look at what do you call it? Look at the trading plan. Take your time and trade today. Look at the money you would have printed if you just would have took that put. We already knew this was going to happen. We already knew this. And if this didn't happen, then the only other thing that could have happened was this, right? That could have been the only other thing. So once you understand these concepts, then you have a little more confidence in your trades. Then you let it play out. Then you're not so, zoomed in, looking at one candle and trying to do 37,000 calculations in your head that don't even make sense. Because I know it gets hectic when you're in a trade. And you have a plan before you hit buy. And then as soon as you hit buy, that plan goes out the window. As soon as that candle goes against you, then you're like, oh no, there goes one candle going against me. I messed up. And then you try to stop the bleeding and then it goes in your favor and you're like, God damn it, I just did the thing again. I did the thing again that I keep doing, that I keep getting upset, and I said I wasn't going to do it this time and I did it again. If you're on that journey right now, you're on the right path. Right? If you're on that journey, you're on the right path because that is the hero's journey for trading, believe it or not. That is the hero's journey. And if I just describe something that you went through perfectly, if I just describe something verbally that you physically felt or you mentally understood in your mind's eye what I was talking about, that's not an accident, right? That's an on purpose. That's not an accident. So if I'm telling you this, it's not because I'm a wizard. It's because it's the truth, most likely. It's most likely the truth. I told you to buy a put right here. If you didn't buy the put here, nothing I can do. It's about risk to reward. If this didn't work, then you stop out short. You wait for the next setup. You can't be wrong. It's really hard to be wrong twice in a row is what I'm trying to tell you. Let's hit this target. Well, actually, purple would be the target because I think we're in purple, but technically purple would be the target, but it's so close to key level. Look, see this range I told you we're going to be in? Don't overtrade this. Do not overtrade this. We knew this was going to be like this today, right? We already knew this. So maybe here's a little strategy. Maybe, all right, is everyone listening? Maybe let me make sure everyone's listening. Everyone type or put something in there so I can see. I want to make sure everyone's paying attention. All right, got one something. This guy's funny. All right, cool. One more. Okay. We'll go on. But anyways, so maybe a strategy for that could be employed today. Closer, okay, I see it. I see you. Closer to FOMC or the Fed meeting, maybe when we get closer today, a straddle, right? A straddle. So you buy call, buy put, and then you let one of them win and you close out the other one, right? So let's say we're further on in the day and we're chopping along in this right here, right? Further along in the day, we're chopping along that. What's going on? Okay. The computer's messed up. Okay. So what you could do is you buy call, buy put. One of them will get stopped out, right? And then the other one turns into the winner, and you just gotta track it. Just monitor it appropriately. And obviously, if you're gonna try to do this, 0 DTE might not be the best option, right? Because you don't want theta, because it's gonna be the end of the day. It's gonna be towards the end of the day, so you don't want theta to eat away your contract, right? So maybe you might have to get an extra day on your contract. You don't want theta to eat it away. All right, now look, so we broke key level. If you're betting on break a key level puts, you can only target to the 5. That's your best bet, right? That's the only other level of liquidity we have, which would be at 559, basically round number right now, which would be perfect. This would be perfect if it went down to touch this, because we know that already 5900 is a major level, right? We already know 5900, 65900, major level. And if that lines up with the 5, then most likely if we break below 63, 5963, the most likely target's going to be at the 5, exactly at the round number, right? So let's wait. And look, again, you know where your calls are going to be. If you don't get below this, if we don't do this, there's no reason not to buy a call here. But you're thinking, well, I don't know if this is going to happen in the future. I get it. This is where you got to monitor everything else to make sure that it makes sense. Wait for some confirmations. Look to see what happens with the legs. See if this blue starts pointing up back towards the 0 line. Now we're below the water, right? We just got below the water. So if you're doing MACD strategy, if you're doing the MACD strategy, you'd enter now in a put. You'd enter when this orange line crosses. So on this candle, if you did MACD strategy, right? I'm not saying that's what we do. I'm just giving an example. Let's say a normal day. We broke here. You would take your entry here, and then you wait until this crosses. You know, you take profit whenever you can, but you're for sure hard out would be when the orange line crosses back above 0 line. So if you want, see how that would work on a paper trade. See how the MACD strategy would work for you. Try it on a paper trade. Take your trade, and then whenever this, you know, if you get in profit, you start moving your stop, or you know you stop out whenever this orange line gets back up to the 0 line. So that's one MACD strategy. You could also get in your put now and get out when the orange and blue line cross. So you can get out on the cross of the blue, or you can get out when orange gets back above 0. That's the MACD strategy. So test it, see if you like it. So for example, if you were to employ it, you would have went in on one of these candles here. That's kind of like a judgment call. Probably this one to be more accurate, this green one. And yeah, you could have made something if you would have taken this trade just using MACD alone. So look, if we get below this white, what's the next most likely target? All right, most likely it's going to be pi the 5. Most likely it's going to be at the nice round number. And this is all you can, so put here, you can only target to here. We got through here, okay, you can only target to here. This is how you should be trailing your stops. Now let's see if we retest key level and reject underneath it. So let's say you're here, right, in the trading day, and you're like, all right, I'm ready to trade. You have to measure your risk to reward. On the break, retest, and reject of this level, are you going to be Johnny on the spot to hit put? And then if you do buy put, where's your target? To the 5. So this break, retest, and reject, you got to measure your risk to reward. That's up to you. And you gotta figure, did I get the fill, the proper fill? If you get filled at this level, and you know for sure it's turning around, or you know, rejecting back down because this didn't close. You see how this didn't close yet, right? So if you're waiting for the close, then you gotta wait. All right, let's see. Break, retest, let's see if it rejects. Now, look at the precision you'd have to have. So you gotta measure your risk to reward. Is it worth it to try to catch this wave if it happens? If it happens, right? This is the one where is this one candle going to be the break and retest? Or is it going to be more of a movement? I get it. It's hard to determine that. That's why you need to zoom out. You need to zoom out a little bit. I get it. I know all the questions you have in your mind. Everyone has these questions. You're not odd for thinking this stuff, right? That's why it's important that you employ your strategy. Whatever it is, you have to employ it to accuracy, 100% accuracy. And chances are, look, the candles, when you're in the trade, the candle's moving, right? The price inside that candle is moving. I'm sure your brokerage, you see it moving probably a lot more volatile than this. If you're in there moving your stop, this is what's going to stop you out and make you lose trades. Because you have to have some type of criteria, right? So it's either I'm going to get out when this crosses, or I'm going to get out when we hit this level. Or I'm going to get out because I have enough profit. I'm comfortable with this profit to move my stop loss. It's got to be something. You know, there can't be just, I'm feeling it today. Let me, Jesus, take the wheel. I don't like trading like that. Look, we're still below the water. The orange is still below the water. All right, I'm gonna go look at it, Ron. Let me go look at your picture. Ron, okay, I see what you're sending me. I don't know how to interpret this, and this looks like a very difficult way to trade, man. I'm not gonna lie. This looks... I don't even know how this works. I'm assuming you can just grab where it says like stop loss. I'm assuming you can grab that and slide it up and down. And I get it. However, I still don't think this is the most effective way to do this. If you look at the video that I have on the, what is it? How to enter and exit 0 DTE options. That video that I have in there. If you can get something like that, and I know it's scary to try it, maybe you try paper trading it. But I honestly, maybe I just don't know about this method. I think this is the latter thing because I just don't use it. But I honestly, it seems like you're at a disadvantage trying to trade the way our strategy with that. It seems very hard to do it like with that ladder. Okay, look, really quick, I just wanted to, okay, you know how we always stop ourselves out for no reason. We're like, God damn, we should have let it, and we never know. Well, how do I know when? I get it. We never know when. However, if you constantly stop yourself out too soon, you try to use this MACD. Look, it never crossed, right? It never, the orange and blue never crossed. So, you know, if you would have moved your stop, this green one would have took you out. You see this? This green one would have took you out for no reason. Let's say you took this and then it retested. This green one would have took you out because you're expecting this to be the break, retest, and reject. So this one would have taken you out for sure. And that would have happened because you didn't wait until it crossed. You didn't wait until it crossed. And then also you didn't take into consideration, look how far below the water we are. Is this going to be a weak bull cycle coming in? So the weak bull cycle shouldn't allow it to get above 59.63. And if we were in any other day, I think our approach would be different. But because it's FOMC, we can't expect the price to run away from us too far, right? Because it's FOMC, we know they're going to try to keep it tight because they don't know. Well, we don't actually know what Jerome Powell is going to say. And look, do you see how it didn't close? And look how much money you could have made. Look how it would have stopped you out if you just would have held a little bit longer. Even though these scary green candles came in, you just needed to hold a little bit longer. You usually get another bite at the apple. And then, so if you're doing the MACD, if you wanted to do the blue and orange cross, you'd get out here. So if you took your trade, whenever we set it, when it crossed right below, probably this green one, then you'd get out here when it crossed. Or it didn't cross yet, but whenever it crosses. That's the MACD method if you do the one I just described. So it still hasn't crossed, so you can still maybe milk a little bit more from it. So if you keep stopping yourself out, use this MACD. Use something, or I don't know what to tell you, but you got to stop doing the same thing over and over. It's the emotion that's getting the best of you. It's the fear. It's fear. You're fearing losing the $10 instead of allowing your system to work for you. So if it wasn't FOMC today, or if Powell wasn't speaking, I think our approach would be different on some of these moves, right? Like, for example, maybe on the rejection of if we were to get back above 63, let's say, and make some strength here, I'd probably make a call out here. But the range is tight. The range is really tight. We already know the range is tight. So I don't want to do too much today because, all right. So I mean, we're still gonna do what we do. So let's see if that happens. Let's see if we get another this, right? Remember, it makes sense if we make this support again. Otherwise, look, the same usual suspects, right? Our call entry was up here. Your put entries on the break, retest, and reject. Usual suspects. Look at the MACD. Remember the week what is it? What did I say? The week bull cycle. Jeez. Don't get old. See the week bull cycle we needed to wait for? And look, we already knew that the price wanted to go to where? If we get below 650, this is what I'm telling you. The market's going to do what it's going to do. It likes to go to the next level of liquidity. It has to grab it from somewhere. So, try not to let these candles scare you because it has to grab the liquidity from somewhere. It's not going to just break this level and float in the middle of nowhere, right? That's not going to happen. It has to go somewhere. The orders have to be filled. This is what you need to understand. So now that we got past here, the orders have to be filled. Where's the next fill going to be at? You have to imagine there's retail traders or whoever, they're buying market orders. So when they're buying market orders, the market's going to say, oh, okay, next level of liquidity is down here. Here's where you're getting filled at, right? And there's already limit orders placed on the 5 on these key levels. There's already orders there. So they have to go get filled. That's how we have some confidence in if a certain level breaks, you got a higher probability of getting to the next level. You just need to wait for the pattern to play out to prove it. But look, we called this on the break a long time ago, right? We knew exactly where our next level was going to be. This is how you trade. You can only go level by level. And so you need to have your rules, right? I'm waiting until this. I'm holding until this crosses here. I'm going to wait to see price action. Look how below the water we are. There's no reason to leave the trade. We're too below the water. And now we're probably going to hit the target, right? It's not a guarantee. We're all of our moves are based off probabilities. It's all based off probabilities. So the reason I knew we're going to get down here is because I understand the risks. I understand the probabilities. We can't take calls because we have to get up here for calls. Puts was the only option because we broke the, look, what did we break? Look at this. You see the liquidity box? We broke the liquidity box. And not only that, we broke it, retested it, and rejected underneath the liquidity box. Still far below the water, right? We're still way below the water. We weren't even testing the zero line. So there's no reason to leave the trade. And the reason why I left this range up here yesterday was because I knew this was going to happen. And I'm glad I did that little lesson about expectations and on risk to reward, right? We can only go level by level. That's all we can ask for because every single liquidity point is a flexion point. Every single liquidity box is a flexion point. So once you understand that, you understand your risk to reward a lot better. We're still below the water. Remember, this orange line below water has the strength. This is the current. Wherever the orange line, that's where the price is going to drag. And look, if you're following MACD strategy, you're still in the trade, right? Because you got in on the break when zero went below, or excuse me, when the orange went below zero, which coincided with our break a key level. That's confluence, right? So our key level broke and we went below zero. That's confluence. And we broke this purple, right? You see the purple? We broke key level, we broke below on the MACD. That's confluence. We had more than one reason to take this trade. And now if you're in the trade, you just need the discipline to hold until your profit, until when it's no longer profitable. You hold until it's no longer profitable. And then you may be thinking, yeah, that's easier said than done. We don't know where profitable is. That's a lie. Yes, you do. Profitable is going to be to the next level of liquidity, right? That's what it's going to be, because it's always like that. So we do know the answers. Our emotions get the best of us. This is an emotional game. What happened? Is your laptop messed up? What? What kind of... How is that possible? All right, listen. No more laptops from Walmart. Okay. Dang. That Chromebook sounds like it has spinning hubcaps on it. Oh man, look at the price. Come on, let's hit the 5. Look, it doesn't have to be pretty. Like, this is not pretty, right? Look how, it keeps testing but you have to understand, once this breaks, the orders have to be filled. The orders have to be filled from somewhere. It's going to fill at the next liquidity level. That's where they're going to get filled at. And then once it gets here, then we're going to figure out who's going to win from here. This is the mechanics of the market. Look, you're still below the water. No reason to leave the trade. You're still below the water. You see how strong the orange is? Look, we already knew this was going to happen. We already knew this was going to happen. Our call entry had to be up here. And we needed to see this, right? We wanted to see the dance. We need to see a little cup form. We need to see a little cup form. Because the cup tells us that we're building liquidity. Right? This motion here, this up and down motion, is liquidity building. So when you see liquidity building at your shoulder, okay. And then when you see certain candles, okay, you know what time it is. All right, everyone pay attention really quick. I want to show you something. I just want to show you something really quick. We're going to find some empty space. All right, I'm going to use this space right here. This is empty space. Let's say you have a liquidity box here. All right, let's say we get a liquidity box here and liquidity box here, and you believe that price is doing this, right? So you take the trade here. You take the trade here when it breaks whatever your, let's say your algo's like this. So you take the trade here, a call. You buy a call. So you're buying a call here and you're hoping the target is the bottom of this liquidity box, right? That's all you can target from here to here. That's where you're targeting, right? This is, you know, hopefully you get to the top of it because you want to see this range get tested too, right? But if you're taking the trade here, now sometimes what we do is the price will go here and start rejecting here or this or this or this, and then we get out of the trade here. You have to ask yourself, why are you leaving the trade here when you know the next level of liquidity is here? The price has to get up here to grab the orders, to fill the orders. So when you're exiting here, you have to ask yourself why. The price has to get up here. It may not be pretty, but the price has to get to a certain level to fill the orders. Once you understand that, you'll feel a lot safer, and that's going to take time to feel that comfort, to feel that safety, and understanding that concept that the price most likely will continue to the next level of liquidity. All right, now you see on the MACD how the orange and the blue, they're starting to point up. Now they're pointing up. Now that means weakness. Now that they're both pointing up, this is weakness. Doesn't mean the move is over. It just means there's weakness coming in. Now weakness could mean, okay, the market has now reached the next liquidity box, right? Now we're in this box. Remember, I drew this morning. This was drawn this morning. And it had to be one or the other, so it's not like I'm a genius. It had to be either up or down, right? So now that we're in this box, you have to break this box to know where the next level of liquidity is. We're in this liquidity box. So you need to break the box to figure out the next zone. And then the next zone is probably going to be the next round number, right? 58. It'll probably be down here. Oh, I just messed up my new toy. And why 58? Because it's a round number. And the market likes that. So this pink and this white, this is actually our range. You see it, right? This is actually our range. So I told you we're going to have one or two good moves today. So we're still below the water. I want you, I'm keep reminding you of these concepts so you understand you can hold your trades longer. You can hold them longer. You know, usually you get another bite at the apple. It's rare that you only get one chance. The market usually likes to retest a level because they got to settle out the orders, right? Oh yeah, by the way, StubHub IPO'd today, and I bought a few shares. See what happens. I have a small position in StubHub that IPO'd today, so. But Sonny, trading off your phone, I don't know how you're doing what we do off your phone. That is crazy. Absolutely crazy. I don't know how that's possible. I don't know how it's possible and you still come out on top. That is crazy. But look, you better believe we're going to hit this target. Boom, target hit. Target hit. You see how ugly it is to get here? But once we got below this, boom, target hit. Now I'm probably going to start moving my stop. Now I'm going to start moving my stop. right? Because at first I was up here. I had to go through the pain, practice what I preach. Now I'm going to start moving my stop and start collecting. Because we're at the 5. And you know, the 5, it could easily reject right here and stop me out and lose. So let me go ahead and collect now. Now I'm in profit. Can't lose from here. And I'm not gonna be greedy. I'm gonna start moving it. So if it stops me out here, I get stopped out. I'm not gonna be greedy here. Because I see the momentum shifting up. I'm gonna see if we retest this 5 one more time, and then I'll take profit on the 5 if I get a chance. I'm gonna stop myself out probably. I don't want to overstay my welcome, and I see weakness. I really like it to touch the 5 again. I'll probably take 2 contracts off, and then because I went in light. I did 4. I'll take 2 off here, and then I'll leave 2 in profit, but probably just barely. Hold on, I need to focus really quick. I'm in my broker. Okay, I stopped out. I stopped out. That's fine. I'm gonna hold my other 2 a little higher. Okay, collected that. Who's TJR? I don't know who that is. Who's TJR? I'm probably gonna move the other okay, my other ones got stopped out. Okay, that was a good trade. A little something for the day. I knew we can get one move. I went underneath 63, right? We have our highlighted ranges. If you took these are the safety ranges, the highlighted range. So I took this. I took profit on this green, and then my other set somewhere in here. So that was a good trade. I'm okay with it. Something for the day. Coffee money. Coffee money. All right. So I just walked you through one of my trades. Everyone was here. We all got the notice. And that was that. So this head still be forming here, right? So if we get like this, you know, and if we do get above 63 again, your target is going to be small, or it's going to be, you got to risk to reward. Everything we did earlier, just measure risk to reward, right? You know, the 5 has liquidity, so buying a call on the 5, not a bad idea. Buying a call on the 5 when you see we're in a bull cycle, momentum pointing up, also not a bad idea. It's not I'm not saying for a scalp, not to hold it forever. No. I'm saying you might be able to get something out of it. I'm identifying risk. I'm explaining to you how to identify risk. I'm going to take a quick break. I'll be right back. Don't overtrade this. Just be patient. Don't overtrade. You see what's happening. We already knew this was going to happen. 1 or 2 moves. I'm probably done for the day. I'm going to, or I'm going to wait for Powell, but just be patient here. Don't overtrade this. Quick in and out. If it is in and out, scout. Don't sit here and wait all day. Take your money because FOMC, right? I'll be right back. Don't overtrade. Okay, I'm back. For Discord, when it comes closer to PAL time, I'm gonna I'm gonna try my hardest to be here for PAL. And I'm gonna try to stream it when he gets on. And I'll see if I can get it up in the background so we can trade it together. I won't be on YouTube at that time, but I'll probably be on Discord. I don't know, we'll see. We'll play it by ear. Okay, so the other day, remember I said normally before a movement, the market likes to grab liquidity, right? So before the market goes down, it likes to go up because it needs to grab liquidity. We see that right here, right? Pre-market, it went up, grab liquidity for the down. I'm telling you this so you understand risk to reward. It went up, it hit level liquidity. This is why I said if you want to buy a put now, it makes sense to buy a put now. I want you to understand these patterns. In the morning, it usually, not every single time, but usually it goes in one direction before it goes in the other direction before the move, right? They grab liquidity and then make the move. Very rare does the first candle start green and then continue green. It's very rare. Also, so that was one OG move you could have to add to your arsenal, right? Understand we're gonna grab liquidity 9 times out of 10 from somewhere before we head in the other direction. Okay, so that's number one. Number two, you see that MAs are plays for either rejections or break and retest. So if you were to buy a call here, that's not crazy, because 9 times out of 10 you can get something out of it. It's very rare that the price hits the 5 and just continues down. It's not impossible, rare. Usually it hits the 5, likes to do a little dance, and then bounce. So what you're betting on is you can make money on the dance, or that it's going to turn around. And when I'm saying the dance, I mean, here, let me show you what I mean. Let's say this is the 5, right? This is the 5 right here. So price is usually going to hit the 5, retest it, bounce back down, retest it, and then reject it if it wants to head down, right? So your opportunity for a scalp is here on the reject and retest. And also what you're hoping for is that you don't hold your trade too long. You know, you put your stop, let's say here, and then if it continues up, you can collect. if it rejects. If not, you know you can get something out of it 9 times out of 10. You can get a little something out of it. You just got to be really Johnny on the spot with your take profit and stop loss. So you'll learn these techniques when you get a little more confident, a little more once you start making enough money where you have gambling money. Like yesterday, I made enough to, take a couple lottery ticket gambles. And I took a gamble, but it was, profit money, so it was fine. Everything's cool. Even this little pattern, you see what's happening here, right? Even this little pattern, if you want to scalp, you got to learn to take certain risks. You can take the risk if you have the proper risk management. So let's say we get back down to this level and you want to buy a call here. Put your stop immediately there because you see where the support is. So if you get here, put your stop right there. And hopefully you can get to the next target, right? To the top of the range, this little tiny range. I'm not telling you to do this. I'm just saying, once you get a little more confidence, this is the stuff you're going to start to try to do. And you're going to be, Ron, I don't know how you're going to do it with your brokerage and your system, the way you do it, because that looks extremely difficult. Man, I would really love you to try the other way, because I think it would make a world of difference for you. I think so, and that could be that I have a bias because I only trade one way. But I like simplicity in the trade. I think a lot of times we complicate things too much. Right? The trading is simply, we're in one liquidity level and we're going to the next level. That's it. Right? And whatever the thing is that you have on your brokerage, it complicates that process. I think it's more for long term. I don't know if that's for like day trading, like where we need to be in and out. Maybe, you got 5 minutes, maybe you got 2 minutes. I don't know what your time scale is, but for the moves we do, legs like this within intraday, that method just seems really hard because it seems like there's extra steps. And you kind of need to see the candles. You don't need to, but it would be very helpful if you had candles to help you, because the candles can tell you a lot. If you see a big wick, then that may tell you to hold longer. If you see a huge wick, because you may think, oh, here's a hammer candle coming in, or here's an inverted hammer, whatever it is. But I just think you're limiting your data, your now time data. You're limiting it severely by using that method. But I don't know, man. A lot of people use it. Maybe it's just not for me, but no, not. I'm going to send you a screenshot of what I'm talking about. Maybe like a small clip of what I'm talking about. Because, yeah, I'll send you a small clip of what I'm talking about. Or maybe I can find it on the internet and reference it and send you the link, because I see your entries. I'm seeing your trades, and I just think you do a lot better. You do a lot better the other way. So we'll see. I'll get that out to you for sure by today. I'll make that a point. But look what I said. Let's say you buy a call here. Look what I'm telling you. You got to learn to take these risks. Buy a call here and trail it. If you get something, fine. Let's say you went in heavy here, 10 contract, or however many you think is heavy. Let's say you went in 10 contracts here, and it went $10. That's $100 in 2 minutes. I literally just gave this play away, right? Buy it here and put your stop right there. You don't have to lose a dime. Look at this. Look, you don't have to lose a dime. I literally just gave this play. You take the trade exactly here. And then you put your stop right there. So this is, now, if you're able to fill this, if your brokerage is able, there's nothing I can do about your brokerage being able to fill contracts at a certain price at a certain time, or delays in your internet. I can't do anything about that. So you're gonna have to like use your system and try to figure out a way to make it work. But look, you don't have to take any loss. You buy your call here and you trail it. You take your profit, get out. You know where your range is, right? This is the expectation, is your range. Your expectation is the next level of liquidity. So again, in this small range, let's say you did 50 contracts. That could have been that could have been your goddamn week. Right here, from this move, from bottom here, right here, that's your week of work. And so, Ron, we had this discussion yesterday about scaling and making it sustainable. You know, if the market gives you this range, then you got to do what you got to do to make it sustainable. It all depends on your risk management and your tolerance. Yeah, but it has to be that precise, and it's very hard to make. You would have to have like, excuse me, limit orders already set. You have to have limit orders already set when you're trying to do this strategy right here. It's always at the top because, excuse me. Okay, I get it. What you should try to do instead, and I know it's impossible because the strategy we have to wait for a break of something, and a break of something usually means a push in that direction. However, I know it's counterintuitive. Try paper trading it at first, but if the issue is you're always getting filled at the high, and then the retracement always stops you out. Let's say you're going to buy a call, try to get in on the red candle, not on the green candle. And then vice versa for the puts. If you're going to want to buy a put, try to get in on the green candle. That's going to give you your best entry. Boom. So if you're following this, you'd buy your call now and then trail it, right? Chase it. Buy your call, 10 contracts, 100 contracts, boom. You just made $1,000. And this one move right here, look. Look, we just did it again. Real quick, $1,000 real quick in 1 minute. So I'm telling you, your scale, your risk tolerance, this is how you make money. And it all depends on you. There's only so much I can do. Yeah, you're right. Lee, exactly. When you get that computer, I'm telling you, Ron, you too. I'm gonna show you something, Ron. Please, man, just try it. You can probably get a sim account to try this thing. Just try it, man. It's gonna be so much easier. Yeah, by the phone is crazy. You guys trading off your phone is absolute insanity. But Ron, here's the thing. You're saying that it's hard for them to trade off their phone. I think it's equally as hard for you. It's equally as hard for you. I'm telling you. You don't know it yet, but it is equally as hard for you. I took this little scalp and I got stopped out. I got stopped out. It was $4 because I got a horrible. I didn't get filled properly. I made $4. Yay! Actually, not even 4 because I had to pay fees. So I made almost $3. Yay! That was one contract. So let's see how many $3 I can keep scalping here. Try scalping $3 at a time until I reach victory. Oh my God, if I just would have held it a little longer. It's okay. We already knew. We already knew. It's okay. Can't be upset with it. You see this tight range we're in. So I'm going to set alerts. We're just in this range. I'll set an alert. Don't overtrade. I'll be right back. Take a break. Don't sit here and stare at the screen all day. And I should be able to set an alert here. Alright, so I set an alert on my 5 and I set an alert on key level right here. So I'm going to take a quick break. I'll be right back. You take a quick break too. Go look out the damn window real quick. Sitting here. Oh, wait. Hold on. See, now I can't leave. Now I can't leave. Because remember, we were looking for this, and then maybe this, and then this. You know what? Such a tight range. FOMC today. I think I'm gonna be cautious here. I'm not gonna go in. I'm gonna be cautious. I'm not gonna let these 2 green candles make me think something. Okay, my alerts went off. All right, who thinks it's going to be puts here back down to the 5? Or who thinks it's going to break out above? Oh no, what did I just do? I just messed something up. Oh, nice. Nice. Ron, you just had to prove me wrong Ron had to go out of his way to prove me wrong and say I can make money with my method. Oh shit. Oh man, look at Ron. Look at Don't overstay your welcome, Ron. Look, the student has become the teacher. I made $3. Ron makes 50. Thanks. I love it. I love it. What is going on? Oh, that's why. Okay. I'll leave it. Wait, who bet puts? Did anyone bet puts? Oh, okay, yeah, you bet puts. Yeah, there's gonna be later. So now you got a little bit of cushion for yourself for today. What I recommend is Okay, Ron, here we go. Here's the strategy, right? You have secured profit in your hand right now, okay? You've already won. Now, here's the thing. Later on today is the opportunity to make a lot of money. A lot of money today. However, we don't want to risk what we already have. So you have to risk something in order to make that lot of money. What I'm telling you is later today, when we start trading, when the price action moves, only risk a portion of that money. Only risk a portion. Therefore, no matter what, you're going to walk away green for the day. I really hope you employ this strategy for today. So if you made however much you made, whatever it is, right, profit today, take a percentage, maybe 30%. I'm only going to risk 30% for the rest of the day. Therefore, you can keep 70% and call it a day. You could lose a lot, but if you manage your risk appropriately, you won't. 30%, 50%, whatever you're comfortable with, and that's it. Therefore, you win for the day. Hell yeah. Hell yeah. I like it. Wait, why are you scalping on the phone? Don't, Sonny, stop scalping on your phone. This is destructive behavior. I should have never told you guys about, I should have never told y'all. Should have never told y'all about to do this. I actually said, I don't want anyone to try this. I'm just saying, when you get more experience, you're going to feel more comfortable. What does everyone in the Discord do? Start scalping. I made money. What's wrong with you all? You have no self-control. What the hell? I literally said, don't do it. And then everyone in the Discord's like, yay, I made money. Okay. Oh my goodness. It's insane. You guys are crazy. Absolutely crazy. Just no regard for no regard for the rules. Matter of fact, I didn't even finish the sentence and Ron was like, yay, I made money. I was still talking, Ron. What the hell? All right, that put. Look at that put. That put scalp. How much is this? 1, 2, 3, 4. So look, your calls, it has to be above this level. You understand why now, right? You see it. It doesn't matter how we feel. It doesn't matter even what the candles do. When the price hits a certain level, then the market is gonna make a decision. Who's gonna win? Who has more orders? So in this, from the 5 till this key level, in this range, how do you know what's gonna happen? You don't. Therefore, you only know who wins after the play. Sure, we'd like to get in at the very bottom, but that's unrealistic. We have to ride the wave. You see the wave? You're riding this wave. So we already know. Look how simple this is going to be. We already know. Watch. Watch this. Okay, this is annoying me now. Now I got to get rid of you. Okay. It can only be one of two things. Watch. That's how simple this is. For today, either the market is going to do this, right? Or it's going to do this. So however long this takes to play out, I'm not sure. However long this liquidity box takes to play out. But one of these is going to happen. You see where the liquidity is built. Here, I'll make it a little more. Watch. You see where it's built. Actually, you know what? Look, you still have this phantom liquidity down here too. So I'm going to take into account this as well. Okay, So we're in this liquidity box. If we get below the 5, then you can damn near better bet. Yeah. So we got it all set up. So break below the 5, break, retest, reject to the 5, or above key level. Yeah, I'm comfortable with that. But above key level with some structure, not just one candle, right? When I'm saying structure, I'm saying maybe it's going to be a couple candle movement for the break and retest. Like that. That's what I mean. You know, ideally, we'd like it to break, immediately retest, and then start rejecting. We'd like that, but sometimes it's the slow burn like this. So it's very clear. It's very, let's look at the, so what's the macro structure? Okay, it's in the trading plan. Everything's in the trading plan. Look, either this is going to happen. I'm on the 30 minute, by the way. Either this is going to happen right here. Or it's going to be this right here. All right, so whoever said puts, big win. Big win, whoever said puts. But here's the thing. We already knew. We already knew it had to be puts because our calls are only above 59.63. So we already knew this was going to happen. And look where it's going to touch. Exactly, it touched that 6.59. We knew we were going to hit 6.59. We knew we were going to hit 659.00 at some point. And I said that way over here. Way over here when we first broke below. I said, okay, now we're below here. What do you think the next target is? The 5. And I guarantee the 5 and 659.00 is going to line up. I told you exactly that was going to happen. And when that happens, one of two things is going to happen. Remember, I drew it over here. I told you, when that happens, when the 5 is like this, either one of two things is going to happen. It's going to bounce like this, break, bounce, retest, and reject, or it's going to bounce and reject. So fully aware of what to expect. And look, once you get comfortable with this, buy calls on the liquidity level, because you know you got two opportunities. One opportunity is going to be the test of it, right? Because it's going to test it. That's one opportunity to test. The other opportunity is if it, now that you're in your calls here, your trade's protected, right? Zero stop loss, maybe $1, maybe $1, right? So we've identified where your flexion point is. You buy your call here. Your first win is going to be here. Your second win is if it continues up. So you have the most amount of reward on your MAs. And there you go. See your range? Back in your range. Easy. We knew this was going to happen until, most likely, FOMC, right? We already knew this was going to happen. This is how you scale and make money when you understand these concepts. You know we're in a range. You know where you're... Look what's happening. There's been no change. Anyways, I'm going to take a quick break. I'll be right back. Don't overtrade. Okay, I'm back. Yep, still in the range. Nothing's changed. Nothing has changed. I want to address a concern really quick that came up. So, if people are asking about P&L, my goal here is not to try to tell people you can get my bank account. That's not my goal, because that's not even possible. It's not realistic. So showing numbers or images that could easily be excuse me, photoshopped doesn't prove anything. Any of these images can be photoshopped, and there's even simulators that show false trading accounts. They actually make simulators for that. The reason why I don't feel the need to show any of that is because my claim is not that you're going to get my bank account. My claim is that I can show you the process to make your own bank account. And the way I prove that is you can go through my catalog from January or February of this year to see for yourself. So it doesn't matter what images I put on the screen. What matters is that the price action happens when I say that it's most likely to happen. It's irrelevant if I actually physically collect $1 or $1 million. The question is, can you make money from it? Not can I make money from it. So seeing an image doesn't prove anything. The proof is if I draw something and it happens. That's the proof. Seeing an image that can be photoshopped, what does that do for you? Right? That does nothing for you. I'm not selling my bank account. I'm selling you the ability to make your own bank account. The fuck? Anyways, that's to address that. I don't have to prove my bank account. We're not here to have a pissing contest on a bank account. We're here to see how to make this a sustainable business. My bank account is irrelevant. Has nothing to do with anything. Okay, let's say that I had $0 in my trading account. Does that have anything to do with the ability to make money? Does that have anything to do with the fact that I said buy puts on pink, buy calls on the 5, or you can go back to my catalog and look. I don't need to sit here and prove it to you. I have live stream proof, right? I have proof live stream. It doesn't matter what the image that I produce. It makes no sense. Your arguments are stupid. It would be a good argument if my claim was I can give you my bank account. That's not my claim. My claim is I can help you make money day trading. And here are the setups to look out for. So when you're making these arguments, it has to make sense, because I never made those claims. Anyways, back to the action. All right, we see our liquidity box. We're maybe trading above it. We see, look at the price action. Look at the micro price action. Right before it happened. Look at how aggressive this move was. Do you see what weak price action looks like? Do you see weak? And you see deep structure? I'm not saying deep structure, but on a small scale. You see the angle of your wave. Look at the angle. See how deep it is? And you see the little hesitation right here? That little hesitation is liquidity building. Because remember, trading it's the inception. It's a move within a move. It's a structure within a structure within a structure. So when you identify the little ones, it'll help you know what's going to happen. And I'm just pointing these out so you have an idea of what to look out for. So you can see the patterns. This is all pattern recognition. All of it is pattern recognition. All right, so this key level, it was tested already here. So we don't know what's going to happen. You got to wait till it breaks, retest, and reject. Now, because we're above the water, we're maybe, the legs are spreading. What else? I would still like to get above this comfortably. But I can see why you might want to go in on a call, but I would wait for confirmation, a break and retest. Why? Because look, we know the liquidity is built up here and it can easily go against you. Wait for the confirmation. Wait for it to break this liquidity, retest it, and then reject off of it. Now, if you want to take a trade, I'm saying that the risk to reward here is small. It's probably not worth it. I'm probably going to wait for Powell, right? Because I know that's where the money is. And I know I'm in a tight range here. And I know where the money is, right? It's going to be with Powell when we're closer to that time. Also, another thing I want you to pay attention to, you see how the MACD built. Even though it looks like it's like maybe even trailing down a bit, but the MACD was heading up. So the MACD is pointing this way, but price action looks like it was pointing down. This might be a divergence. This might be a divergence, so we'll see if they play out a divergence. See, at least here, we at least broke key level. We at least broke it. So let's see what happens now. I'm not going to trade this. I'm just showing you my thought process. So similar to over here, how you have this little dance. You also want to see the same little dance over here. So be patient here, right? I'm not saying to buy a call. I'm saying, let's say you're interested in buying calls. Wait for this break and retest. If it breaks and shoots out, then oh well. Then you missed the move. You didn't lose any money though, right? Or if you want to hold, if you can hold, then you go in and you wait for the pullback. But your safest bet, break and retest. That's going to be the answer all the time. Because that's just confirmation. If it goes without you and you miss the move, then you miss the move. You don't lose any money though. Do you see why I wanted to wait for a confirmation here? So I don't have to wait for the pain. I don't like going through pain. I hate going through the pain. Because going through the pain, you don't know how long you got to deal with it for. You're at the mercy of the market. I'd rather wait for the retest. So at least I have a target. On the retrace, I don't have a target. But this type of talk is for a normal day. This is FOMC day. The rules don't apply here. So yeah, just to make that clear, today is different. This is not a normal day. This is FOMC. It's rate cut day. You know, I don't want to have a bias, but my bias is that, but I'm a perma bear. I'm not going to lie. I'm always scared the market is going to drop. But my bias is that it's going to be a fake out. That they're going to shoot up, they're going to hit a certain level of liquidity, and then sell off. That would be perfect in my world, but only because I like the pullbacks, because I know, you know, the market over time is going to go up, so it gives me an entry. So I like pullbacks. That's why I'm a bear, I guess, because I know where the up is. Because when we're in the downtrend, at least I have a target for the up. Okay, now we're above the water on the MACD. Okay, just to recap from earlier today, I was talking about taking the MACD position. If you were to do the MACD strategy on a low volume day, or just, you know, low price action or small price action day, let's see, if you were to take the trade on the break of, or, you know, when it goes below zero, so right here on this green candle, if you were to do this strategy from the break to the retest of it, let's see if we would have gotten anything. So puts here underneath key level, and then your exit, if you didn't take profit, you know, at the low somewhere down here, especially when it started to head up, then your exit should have been when it crossed back above, which is over here ish, right here. So take the trade here to there. You still could have made something if you would have taken the trade with the MACD strategy. There's the MACD strategy from the break back the break is 0, back to 0. Here's the MACD strategy. This is what you would have got from it. If you would have done from the break to the cross, it would have been from this green candle to here, somewhere around here. This maybe right here. So this green to this green. So yeah, letting it play out and just finding a good, whenever it starts to curl up, that would probably been the best exit. But again, we're still in the range, right? Nothing's changed. This is why I didn't want to go in on calls, just because we broke the level of liquidity. We needed to break and retest it to make sure that we broke it. We needed to break and retest it because we don't know if this is just a liquidity grab to do what? Go back to the 5. That's why we need confirmation. We can't go in on one candle. I scalped this on this green one, so I'm probably going to take my profit here. I'm gonna let it stop me out. My stop is on, I bought a put on the green candle. My stop is at the, it's on my dotted line. On the brokerage, it's a little higher. It's a little above this wick on my brokerage. I'm gonna chase this. I'm gonna chase it a little bit. And I'm gonna be happy with this scalp. I'm chasing it along my dotted line, so wherever this dotted line is, I'm trying to go back and forth between my brokerage and here. Just give me a second. I just need to concentrate really quick. I'm still here. Just give me a second. I'm trying to do too much. Okay. I'm going to move my stop a little bit. I'm going to keep just a little bit because I'm not going to give away anything. A little bit. I'm right above this last candle. So if it goes against me now, then I'm out. Okay, good. Ah, it got me. It got me. It's fine. Dang, look, it got me and then it continued. Okay, it happens. That was still something. Look, from green to right here, that was good. Good little move. And I didn't know this was going to be a green candle, by the way, because I know I said earlier to try to buy on the opposite candle. That was an accident. It just turned green. Yeah, it just worked out like that. So the reason why I stopped myself out here instead of letting it play is because I see that we're above the water on the MACD, and I didn't want to give away anything, so I didn't do it too risky. I didn't play it too risky. But let's see if holding for the close would have been, obviously probably would have been better at this point. Again, the reason why I'm a little more cautious today is just because FOMC. Today's not a normal trading day. That's why it's a little bit different today. Dang, look at the money I just missed. Dang. Okay, that's fine. Some money's better than no money. That's what I always say. All right, so we're breaking the 5. Let's see if we retest it and reject underneath. Let's see if we retest and reject underneath the 5. Or if we grab the liquidity to shoot back up to 63, to a key level above. I don't like that next key level is so close, right? Because you see the secondary liquidity right here. I don't like that it's so close. Looks like we broke. It's hard to tell. Like, this is like a one candle break retest, right? Ideally, we like the movement. When I say movement, I mean, you know, we like to see it do this and then come back and then reject. Ideally, we like to see this, but, you know, one candle break and retest is possible, so. Just be patient. Don't overtrade. You'll know exactly what's going to happen. It'll be obvious. Don't man, I don't want to. I'm just going to tell you what the risks are, right? One of two things. We always go through it. It's either going to be the movement, where it's like, you know, you get candles like this and then it comes back up and then it that would be ideal. Or it's just gonna go, it's just gonna break. So do you see why you wait for the break and retest for puts? And you see why it's not a bad idea. It's very rare that price goes to the 5 and just breaks straight through. Usually, we're going to go over it again. Usually, 9 times out of 10, it's going to hit the 5, bounce, and then continue. This is the 3rd time we've gone over this, right? 9 times out of 10, that's what's going to happen. Keep these patterns in your mind so you know what to expect. So none of this is a surprise. We need to see if we gain strength up or if we start trading below. Now, we got below the water here on this candle right here. We got below the water. So let's see if this bear cycle is going to take us to key level right here, 50, 58, 57. But we're on the 5, so this is risky, right? You're on the 5. Wait for deep structure, the deep structure like that, right? Just be cautious today, because it can turn around on you. There's no, might as well wait for Powell, because once the price starts going, it's gonna go, and you know you'll have more. Right now, we're really, you know, scratching at dimes here, because it's such a small risk or reward. Look at our liquidity. It's down here. That's why I have the secondary liquidity here. That's why I have it here. So we're gonna see if we can target 57. If we can get some strength underneath this 5. So let's say you're playing for under the 5. Your stop has to be at the 5, right? Pretty simple, pretty basic. I'm gonna let this develop a little bit more. Yeah, we're at the 5. Risk to reward is very, very small here. Very small. All right, I'm right here. I'll just wait. Let's check higher time frame. I haven't done that. This blue algo on the 5 is not exact. It's there. I think I could tighten it up a little bit better. think I can tighten this up a little bit better, but let me see what I can do really quick. I want to say build in blue and break a green for the calls. Let's guide off the 5. You see why I told you to wait for the deep structure? This is why. You see how we tapped this liquidity and rejected off the liquidity? That's not an accident. Look at the liquidity box that I drew, how it tested it and bounced right off. How did I know this is going to be the box? Because of this right here. Look at the perfect test of this box that I drew. It to the penny. Damn near to the penny. This is what I was telling you. You measure your risk to reward. Just because this one candle broke the 5, that don't mean anything. That doesn't mean anything. The liquidity's built up here. And you see how wide the range is on a movement. In case you haven't noticed a pattern, we're just bouncing between key level and the 5. This is why I left this key level here all night. Usually I redo the whole chart. The 1 minute, I redo the whole 5. No, I do some of the 5s. I leave key levels on the 5. But I redo the whole 1 minute chart every day. But I left this. Remember me saying I'm going to leave all this from yesterday. Okay, trade light. I'll be right back. Oh no. We're just in this range. We're just in this range. We knew this was going to happen. Look at the trading plan this morning. I said we're going to have 1 or 2 good moves. Here goes 1 good move. Right? 1 good move. This is it. We're going to have 1 or good move until 1 or 2 until FOMC. Look at the trading plan. We already knew this was going to happen. None of this is a surprise. Oh, you're saying is it spreading here? Let me see. Hold on. This is our range. From pink, the range from today was pink to white. This down here. I'll highlight it. This was our range. So we're still stuck in this range. Okay, don't overtrade. I'll be right back. Okay, YouTube, I'm probably going to cut the stream for YouTube, and then Discord, I'm going to check back in closer to FOMC. Okay, so I'll probably just leave the stream going here, but I won't be at the computer, and I'll just wait for closer FOMC. YouTube, if you're interested in learning how to trade like this, send me an email to LiveSPYTrading@gmail.com, and I will get you sorted out. Discord, I'm going to keep this running, but and I'll come back closer to FOMC. If you guys want to hang out, we'll do it. Okay, YouTube, have a good day. Bye.